you're getting a divorce, you own a house together, and you need to sell it. But you know that there's going to be some sort of tax consequences involved, and you don't want to mess up. So what do you need to know? What are the consequences? And what does the timing of the sale of your property need to be? Hi, my name is Tanja Odzak, and I'm a top producing agent here in Oakland in the greater East Bay area. And I understand what it's like to have to sell your house as a result of divorce. Divorce sucks. And even when it's been done amicably, it still sucks. And I mean, let's just be real, because like selling your house and divorce are probably the two most stressful things that someone could have to do in life. And then to have to do both together at the same time, it can be overwhelming. And let's be real, because the challenges that can be with selling your house in this situation oftentimes have nothing to do with the sale of the house itself, but with everything else. And yes, you want to address the situation and you want to deal with it, but you should not move so fast that you miss important details like this, because by catching these details, you will both come out ahead and with less stress. So first, a disclaimer: I'm a realtor, I'm not a lawyer, I'm not a tax professional. So when it comes time for you to have to deal with this, please contact your lawyer or your tax professional to get the exact details for your situation. Anytime you sell your house and there's a profit made, you can rest assured that Uncle Sam is going to come after you. And if this profit is over a certain amount, you're going to be hit with a capital gains tax. So between the state of California and the federal government, this rate is pushing 40%. That is a lot of money. And when you're selling your house due to a divorce, your timing matters. Because in real estate, when you sell your primary residence, you are eligible for a capital gains tax exemption. If you are a single person, you are eligible for a $250,000 capital gains tax exemption. If you are married, each partner qualifies to get a $250,000 tax exemption for a grand total of a $500,000 tax exemption. And it is very possible that if the house is sold after the divorce, that one of those $250,000 capital gains tax exemptions is going to be lost. And at a 40% tax rate between state and federal, that's $100,000 in capital gains taxes. Additionally, to get this exemption, you need to meet the IRS rule of living in the house for 2 out of the past 5 years. And whether you're filing together or still separately, you can still qualify to get that $500,000 capital gains tax exemption. But if you are filing separately, you still need to meet that same rule of having had lived in the house for 2 out of the past 5 years. I don't want anyone to make any mistakes or have to pay $100,000 in taxes when you didn't have to, and nobody needs any more stress. But you should absolutely consult with your lawyer, your realtor, and your tax professional before starting to do anything. The bottom line is that you want to preserve that $500,000 tax exemption. So plan your divorce and the sale of your house accordingly, so that $500,000 capital gains tax exemption remains in place. If you have any questions, feel free to call me, shoot me a text, send me an email, whatever. Make sure to check out my other YouTube videos. And if you like this video, give me a like below, subscribe to my channel, and tap the bell to get notifications